Joanne and Rosemont, how are you?
I'm fine. Thank you for taking my call.
Thank you for
I'm
calling.
not sure I'll be clear on this. I have a daughter who's buying a home, owns a condo, but until her condo is sold, she needs monies to make her 20% on her down payment on the house. We're loaning her the money, but do we need to legally have a statement to prove to the IRS we're not giving her a gift?
Okay.
Because I'm under the assumption we have to pay taxes if we're giving her a gift.
Okay.
And we are not doing that.
You're the third call this week that I got on this. So here's the answer to the question. You're going to sign a letter from the lender saying that you are giving a gift to your daughter in this case, okay? That it is a gift and that there is no payment tied to the gift. That's it. Okay. The lender wants to know, the lender needs it for the underwriter to know that there is no contractual payment, so we have to count it against your daughter when qualifying for the loan, okay? If upon the sale of the house, your daughter cashes in the equity, she has to qualify carrying two properties, obviously, and she wants to take that money and give it back to you. There is nothing illegal about that. Right, Counselor?
What I would recommend happen on the writing of the check for the new purchase, it's a
interest rate.
It's not a gift tax problem if your accountant files a one-page piece of paper called a gift tax return. And you know what the gift tax return says? You're using part of your $13 million ability to give anybody in your lifetime. So if that goes out to the IRS, it's a maybe a couple $100 charge by your accountant. You're totally covered. You will not owe a gift tax when you write that check for the house.
If you just sign the piece of paper that says you're giving it as a gift, the lender's not sending it to the IRS.
No, it's
That's
when their
true.
check, Dave, let me help. When the check clears her bank, anything over $10,000, they send a copy to the IRS.
That's fine. And then when her daughter sends it back, it's a complete wash.
Then she'll put repayment of loan, right?
It's a complete wash. So don't think too much into it. You're going to sign a gift letter that says that it's a gift, that there's no payment tied to it, and then what you do after the loan closes, do whatever you want.
Okay.
Make sense?
Thank you so very much. Yes, it does.
All right, you're the best.
I just didn't want the IRS to get richer.
No, the IRS isn't
no,
getting rich.
nobody wants that.
It's basically a short-term interest-free loan with no payment tied to it. I mean, that's basically what it is. Okay,
Thank you. Thank you.
Of course. Hang on for your Mr. Floor cleaning product of your choice. Joan and Lake Zurich. We're going right up the 294. How are you, Joan?
I'm good, and you guys kind of answered my question that Joanne just asked, but I was thinking of kind of doing the same thing, but I've heard about gifts of equities, but I think that's only if I'm selling the property to one of my kids. Is that how that works?
Or a family member or another family member. We've had a lot of death situations where the estate gives a gift of equity to a grandchild, a niece, a nephew. It could be you, your mother to you to a son or daughter, you to a niece or nephew. It's just gift of equity in a home. You're just given a portion of the equity as a gift that they could use for the down payment and closing costs.
Okay, but I'm not selling anything. My kids want to buy a home, and I want, same thing as Joanne, I want to give them a gift, but I thought I could only gift them $19,000 a year without either them or myself paying taxes.
Dave?
So I'm confused.
From the last caller, this is Dave, the attorney. Your accountant who does your regular taxes can write a 2-page what's called a gift tax return, and people think that means you're owing gift tax. It's a way around not owing the gift tax. You can give up to $13 million over your lifetime. Okay. So all you have to do is just have the guy who does your taxes, on this day we gave her $100,000, and that filing goes in, and what it says is you're using part of your lifetime ability to give more than $19,500. But that's very nice that you know the $19,500. People break that every day, and unfortunately, when they get caught, it's 40% tax. So you're going to avoid all that. Just have your tax prepared, do a gift tax return. It's a 2-page form, and then you'll use up part of your lifetime gift. But you can write it way over $19,500 without worries with the IRS.
Just not over $13 million.
Awesome.
Right.
So
gift tax return.
Yep.
Thank you so much.
Hey, Joan, are you adopting 59-and-a-half-year-old men?
No, but I wish I had the $13 million.
Yeah.
Sure, yeah. A lot of us do.
We all have a dream, Joan.
Yes,
all
we
have
do.
a dream.
Yeah.
All right, hang on for your Mr. Floor cleaning product of your choice.